is a webinar series created to give you, all of you who are here, insights from very specific financial markets and the industry and different analysis that are vital for you as an individual. For you as an individual or for a corporate organization to get the very best success. So basically, FBN Quest is here to bring Ojoro for you to make more money, to have a more successful business, to have better ideas on what to do with your money. And the series features leading professionals from FBN Quest, like the two amazing women. I'm going to introduce them soon, Anne and Ayo, as well as other industry experts who have experience in corporate and private investment management, wealth preservation, financial advisory, etc., etc. And the hope is that through these conversations, your mind is open and you're introduced to a world of opportunities that you may not have had an idea about or have had people to kind of show you the way. And hopefully we're able to engage with you further. All right, so I'm going to very briefly introduce our two amazing speakers, starting with Anne. Anne Oragu is the head of Affluent at FBN Quest and currently leads the sales team responsible for business development, client acquisition, and client relationship management, either directly or through other various partner channels. And she has not one, not two, not 5, not 10, but 18 years of work experience serving in key positions across different reputable financial institutions in Nigeria. So she knows what she's talking about when she's talking about money and investments. We also have the fantastic Ayodele Oshunkoya, who's an associate in the Affluent team at FBN Quest Management. And she's responsible for customer growth and retention within FBN Quest Asset Management, and currently manages, I can't say the number with any levity. I have to be serious when I'm saying it. She manages about 55 billion naira worth of assets and has over 9 years experience across mass affluent, retail, and institutional clients. So these two amazing women have almost 30 years of experience between the two of them, and more importantly, have put their heads together to come up with amazing information for everyone who's here. And so I'm really, really excited. If you have any questions while we're speaking, please type them in the chat box. There's going to be a Q&A session towards the end of the program so that Ayodele and Anne can answer any of your questions. I'll be here like a backup singer when they're answering questions. I'll just be saying, right, you go, that's great. But every little helps. So I'm really, really pleased that you're all here and we're going to get started talking about money. But before we get into that, we're going to start off just so that we're not talking amiss, like my dad would say, so that we are able to give you guys information you need. We're going to start off with a poll. We're going to start off with an interesting question from a poll. So please answer the poll. It's going to pop up on your screen right now. What comes to mind first when you get paid? Are you a loud babe or guy? Is it spending? Do you save or do you immediately think of investing? What first comes to mind when you get paid? I'm not going to lie, I first think of saving. I'm joking. I think of spending. I want to blow that cash. I've already planned for the money before it hits my account. Yeah, my first thought, honestly, 99% of the time is spending. All right, so according to the poll, we have a whopping 40% of you think of spending your money. Those are my people. 17% very responsible, think of saving, and 10% think of investing. All right, so let's get straight into it. And these results that I just read out, what does that tell you? What are you thinking? What do those numbers say?
It says that I'm in the midst of people who are living their best life. But seriously though, I think I'm in the right place. I'm really happy that we have big spenders here because we're here to talk to you about how to use that money. And
Mm.
so I'd say sit back, get out your notes and your jotters, and just follow this conversation. I'm sure that if we take a poll at the end of this conversation, we might have slightly different results. So welcome everyone. Thank you.
All right. Thank you so much. So we're going to go straight into it with Ayo. So Ayo, first of all, before we go anywhere, what exactly does it mean to make money moves? That's the title of this chat. But what exactly does FBN Quest, and more importantly, you and Anne, what do you mean by making money moves?
Well, thank you, Jola, and welcome everyone. Making money moves, it's the steps or the actions that we take into our financial journey or our financial freedom. I also like to spend, but at the back of my head, I also have to think of, the future. I have to think of my financial journey. So making money moves is being able to, make financial decisions. You're in control of your financial decisions. You are actually making your money work for you and you're dictating your financial journey and decisions. It's basically not living from paycheck, to paycheck. I'm always thinking of when my salary is going to be paid so that I can, buy that shoe. But when you're making financial moves, you're actually in control. It's not your money determining, what to do. It's you actually determining what you want your money to do for you.
Mm. All right. Thank you so much. So we're here to make sure that we're not anxious once it gets to the middle of the month. So I'm here to make sure that that whenever at whatever point in time we're thinking about our money, it's not anxiety, it's just more of a sense of surety, like you know exactly what is going on with your money. All
Exactly.
right. I'm going to go straight into it with Anne. Our next question is, what do we need to do to make the right money moves? So Ayo has told us exactly what money moves are. But what do we need to do to make these correct money moves? What are the things we should be thinking about? Can you shed a bit more light on that, please?
Definitely. So I'll just give you steps. And I know that everyone is at a different level in terms of managing their finances. So I'll say just take down the notes and walk through the steps at your pace, okay? The first thing we need to do is to identify our goals if we haven't done that already. And I find that different people have different goals that they intend to achieve, to make them feel like, they've really had a successful life. For some people, it's around family, it's giving their children the best education. For some of the younger people, they want to go maybe to a Harvard business school, at some point in their lives. For others, it could be just to travel the world, right? And have a great time. And no goal is wrong as long as it inspires you. And so once you've identified your goal, the next thing is to find out how much does it cost, right, to achieve this thing. Sometimes if there are more long-term goals, you have to think of the fact that inflation comes in, so you would need to invest those funds so that they would still meet your objectives at the time. But just think about your goals. Remember that you have short-term goals and long-term goals. So short-term goals are the ones that we need to do in the immediate future. I need to start renting a house, the more long-term ones are things I want to do in the next few years. I want to start a business in 3 years or expand or, buy a house. Those are the more medium to long-term goals. So once you've identified that, you set your budget. And please try to stick to your budget, because if you're not sticking to your budget and you're spending, like I can see that 40% of you want to do all the time, you're not going to be able to achieve it. So please go on, set your goals, stick to it. And yes, I know we're human. Sometimes you're going to make a mistake and you're going to spend more than you plan to. And that's all right, right? Don't beat yourself up. Just move on and get back on track and you'll be fine. After you've established that, the next thing to do is to build an emergency fund. And I'll explain. So we're still in a pandemic, right? The COVID-19 pandemic. And it took a lot of people by surprise. People had booming businesses that they literally had to shut down instantly. And I know it's impacted a lot of people in their abilities to even take care of their daily requirements and take care of their families. And so an emergency fund, I mean, you work on what works for you, but the general rule of thumb is to set aside funds that will sustain you for 6 months without having to, go to anyone for stipends or whatever. If you can do that, then it will really put you in a position to start making money moves. Because if something happens, you're not just suddenly going to drop down to level 0. So when you've done that, another thing to really consider is where you have debt. If you've taken a car loan or a mortgage, you have to put a plan into paying for those. Because the thing about debt is that it's constantly growing in terms of the fact that your income, your interest is constantly increasing, right? And so if you just continue to pay only the interest and you don't pay down on any part of the loan, you'd end up paying multiples of the amount of the loan you actually took in the first place, which is not really advisable for people who really want to achieve their goals with money moves. So start to pay down your debts. Where you have bills that are similar that would acquire interest or would just put you in wrong standing, please ensure to pay your bills on time. And then one area that I think a lot of young people are not thinking about now, but is crucial, is start to save towards retirement. Yes, every one of you, whether you're in your 20s or your 30s, it's never too early. The good thing about starting early is that you have so many years to put funds aside. And so at the end of the day, your retirement fund will be really worth it. All the work you would have done, you'd really have paid yourself back for that. And I'll just wrap that up in a little ribbon by saying, please protect all that you've put aside. Please protect your assets. If you have a car, please insure it. If you have property, please insure it so that, you don't just lose it overnight because of a little happen or a little mishap. So I'll stop there and back to you, Jola.
All right, Anne, thank you so much. I'm just going to quickly recap what you've said in case anyone missed anything. So Anne says, in order to kind of make the right money moves, you should be thinking about what exactly your short and long-term goals are, because those differ. Short is more day-to-day, taking care of yourself. Long-term is like, what are you thinking of in the future? What do you want to achieve in like a 10-year period, a 5-year period? What are those things you would like to do? What is critical? What do you need as opposed to what do you want? And so you make a budget and you do your best to stick to it. So you definitely make mistakes, and that's fine. You just need to make sure that you understand that sticking to your budget is actually a long-term goal. You're trying to make sure that over and over, you're sticking to this budget because you have your long-term goals. Put aside an emergency fund. Ideally, we should be looking at about 6 months, without you having to ask anyone for help. Pay off your debt so it doesn't accumulate interest and you end up paying back way more in multiples than you borrowed. Pay your bills as well, and think of retirement early. And finally, insure your assets, protect yourself so that any loss is not magnified by you having to bear the cost of replacement on your own. All right, excellent. So right, I'm going to go straight right back to Ayo and ask, now that Anne has told us what we need to do to make the right money moves, I'm going to ask you what are our investment options, given these like two things that Ayo said, that Anne said we should think about. The various life stages, there are younger people and there are middle-aged people and there are way older people. What exactly should we be thinking of when we're trying to make investment options? What should we consider?
Okay, thank you, Jola, and yeah, very good. You cut all what Anne said perfectly. I think you should be my colleague soon. So basically, there are different stages in life, and I'm just going to put this in two buckets. The young adults, just like you and I, and a lot of people in this webinar, and the older adults or the retirees. But I'll start with the young adults. So as a young adult, I'm thinking of building wealth or growing my investments. And at this stage, I have income coming in from maybe paid employment, or I'm an entrepreneur, or I have a side also, So basically, at this point, I'm thinking long-term investments. I'm also thinking, medium to high risk investments, because this medium to high risk investments actually give you high returns. And I'm also, even if I'm thinking of long-term investment, we should also set aside funds for our short-term investments, i.e. rents or emergency funds, as Anne said. Those are short-term investments. So you should still set aside money, even set aside funds for your emergency funds, even when you're thinking long-term investments. For the older adults or the retirees, at this stage, because like I said, they're retirees, there's some retirees still in, employment or are entrepreneurs, but because they're not as agile as, when you were young. When I was young at 20, 25, I'm thinking, I need to make this money. I need to grow my investment. At this point, you're thinking of income generation, what income would fund my lifestyle, because the funds are not coming like when I was younger. Or you're also thinking of capital preservation. I'm trying to, all the funds that I've kept aside in investments, I'm also trying to, pass it on to my grandchildren, or, leave some funds aside for my children. So you're thinking of capital preservation. You don't want any risky investment to erode all your investments at this point. So you're thinking low to medium risk investments. You're also thinking, short to medium investment, like I said, that would actually, give you income. So you're thinking of something that will give you income on a 30-day basis or 90 days, quarterly, or, annually, that would able to fund your lifestyle, basically. So those are the things to think about at, various stages of life.
All right, thank you, Ayo. So again, to recap, in case anyone missed what she said, when you're trying to make investment decisions, you definitely want to be looking at the life stage you're at. So for younger people, they're looking at more of wealth building, long-term, medium to high risk, because you're sort of like in your prime earning years. This is the time for you to make that money. And because you can afford to take certain risks, because you have a long working life ahead of you. And it's not a small mistake here or there, or some losses here or there, is not really going to shake your financial foundation. You should have some short term for sure, because you need to have your emergency fund, you have bills you need to pay off to live, basically, but you are able to think long term and make decisions based on that. And then if you're older, you're looking more at income generation, you want monthly or quarterly payments, and you're really looking at capital preservation, because you don't have time on your side, so you can't take those risks and lose like you could before. Abby?
Yes, excellent.
Yeah. All right, thank you so much. Now that we know sort of like what to look at when we're thinking of our life stages, whether we're young or we're old, and the amount of risk we can take, and they're just a bunch of products, like when you say you want to invest, that's a never-ending conversation. But a lot of people are newbies, or a lot of people are easily intimidated, and so they just don't know where to start. And if you're looking at a bunch of products that have been put in front of you, like, oh, these are all the different things you can invest in, regardless of whether you're at the earlier stages or later stages of your life, what factors should people really be considering when choosing what to invest in?
That's a very good question, Jola. I like to give sort of like steps that you can work through. And so I do the same thing now. And I'd say the first thing to consider is the goal that you're actually working towards. So just to keep it simple, I'll go back to the goal of maybe going to Harvard in a couple of years. It makes a lot of sense to invest in the currency that you're going to spend in that sort of situation. And the good thing is that at FBN Quest and in the Nigerian markets, we have those options for you. So you have to, keep those sorts of things in mind. The second is to look at your situation. We know that there's a wide range of people listening to this webinar now, and some people might actually be intimidated and think investing, can I afford to do that? But the interesting thing is there are options for everybody. There are investments that are as little as 5,000 Naira. And so look at your situation and make it work for you. The most important thing is to start the process. After looking at your situation, one important thing to look at is your risk tolerance. Please, I know that generally the rule of thumb is that young people can take more risks, but the thing is that it doesn't cut across everybody. So we don't want you to put your monies in an investment, have your bankers or your investors tell you, oh, your investment has declined by 40%, and then you just have a heart attack. So know what you can handle, please. Don't just go with the flow and do what everybody is doing. Think about the kind of risk you can manage. And then looking at the specifics of the investments, who is issuing this investment? Is this an institution that is tested and trusted? Everybody has used them for years, they're comfortable, or whatever it is that makes you feel comfortable, because everyone has a different criteria. Look at the markets you're investing in. Is it equity? Can I handle that? And then I'd say the last thing is be honest with yourself about your skill set. And so if you know that you don't know a lot about investing, please don't take chances. Just work with a tested and trusted investment facility, an asset manager, and let them handle your monies for you while you continue to upskill yourself, so that you don't find yourself in a situation where your money is controlling you because you've totally lost control, right? And so if you follow these steps, I think you'd be making a good decision towards making your money moves using these products. Thank you.
All right, thank you so much, Anne. Again, to recap, when you're choosing your products, what exactly is your goal? That might help you in choosing exactly what the product is. What is your situation? You shouldn't be anxious about whether or not you have plenty money. You don't have 1 million to say you're doing investments. If you have 5K, that's enough to start with. What's your risk tolerance? I don't have very high risk tolerance. I remember once my mom, I gave her some money and then she came and said, well, it's not doing as well as they had hoped. I just started shouting, what do you mean by that? I work for my money. She was just looking at me like, look at this newcomer. This is how it goes. I said, no, please. I want the one that maybe it's 1%. Let the 1%, let me be seeing it. So if you don't have a high risk tolerance, you definitely need to take that into account. So you're not panicking and yelling every day. Who is issuing the investment? It's really, really important. Sometimes because people are really, really desperate, or they really, really want to get involved, they see what looks like a good deal and kind of chase that. And these people or this company doesn't really have the backing. They don't know what they are doing. They're basically using your money to do kalu. So you definitely want a tried and tested and solid firm or group of individuals managing those investments for you, like FBN Quest. And then you look at the market. Markets can be very volatile. You want to make sure that you're just doing the best with what you have. It's investment, not gambling, guys. So you're doing the best with what you have. It's not just guesswork. And then you're also being honest about your skills, so that it's not that after one seminar with FBN Quest, you think you are some Bloomberg expert and you're trying to do magic with your money. If you don't know, it's fine. There are people who are paid, who work very hard, who study the markets, who understand how all of these things work. Give them your money and just monitor it and see how it's going. Again, FBN Quest is here for you. And those are the kind of things you really should be thinking about. So Ayo, I'm going to go straight into asking you, now that we've gotten everybody interested, they're thinking, we've given them all this information, what are the specifics of what FBN Quest actually has? If someone comes to do with their 5K or their 5 million or their 500K or their 100K, what are the options that FBN Quest has available? What are the kind of funds they can put their money into? Wise investments that they can make?
Okay, thank you, Jola. I like the emphasis of, if you're not very investment savvy, you can come to FBN Quest and we'll guide you and advise you. So, at FBN Quest, we currently have about 6 mutual funds. And the first is the FBN Money Market Fund.
Okay.
This is a short to medium-term mutual fund with low capital investment, low investment risk, and it typically offers higher interest rates than your savings accounts. This gives you income quarterly, and the minimum entry amount is 5,000 naira. The minimum holding period is 30 days. So earlier when we were talking about your various stages of life, we're going to talk about all these mutual funds that actually suit into all those various stages of life and your investment goals. The next is the FBN Bond Fund. This is a mutual fund that gives you exposure to the bond markets. The investment horizon is between 3 to 4 years. It gives annual income, and the minimum entry amount is 50,000 naira. The minimum holding period is 90 days. So, earlier I had mentioned FBN Money Market being short to medium term. If you're looking for your short, is there for you. If you're looking for your medium to long-term goals, the bond fund is also there for you. Then the third is our FBN Halal Fund. People are looking for ethical investments these days. Example, I'm a Muslim and we just finished the fast. If you're looking for where to keep your funds in and an ethical investment, the FBN Halal Fund is the right choice. The minimum investment amount is 5,000 naira. The minimum holding period is 90 days, and this gives income quarterly. The next is our FBN Eurobond Fund. This is our dollar-denominated mutual fund. So if you're looking at diversifying your portfolio, or hedging against the currency you currently earn in or you currently have, and you want to have something in another currency, dollars, the FBN Eurobond Fund is the perfect fit. This gives you exposure to dollar-denominated debt instruments, and the minimum entry amount is $1,000, while the minimum holding period is 180 days. That's 6 months precisely. The FBN Balanced Fund is our medium to long-term mutual funds, and it provides capital growth. This, gives you access to, it provides diversification across equities, bonds, treasury bills, and the minimum holding period is 90 days, and the minimum entry amount is just 50,000. The last but not the least, is the FBN Smart Beta Equity Fund. This is our long-term mutual fund that invests largely in Nigerian stock. So this is high risk, and the minimum entry amount is 50,000, and the minimum holding period is 90 days. So with all these 6 mutual funds I just mentioned, it's whichever or whatever your goal, long-term, short-term, low risk, medium to high risk, there's a mutual fund for you at FBN Quest.
Thank you so much, Ayo. Again, because I keep taking notes, I'm going to recap. So,
and again, because you want to be my colleague soon.
Yes, of course. There are 6 registered mutual funds at FBN Quest. There's the FBN Money Market Fund, the FBN Bond Fund, the FBN Halal Fund, which is also known as the Green Fund. It's an ethical fund, the FBN Euro Fund, the FBN Balanced Fund, and the FBN Smart Beta Fund. So these are like different, they have different sort of like payouts, different cycles, so long, short term, medium term, different entry points, 5K, $1,000, 50K, and they also have different risk rates. So it's up to you, whatever works best for you. I think now would be a good time to take our second poll. Now that we've spoken about risk and what you should have and what you should be doing, and we've gotten some information on what's available, I think now is a great time to do our second poll, which has popped up on the screen and is going to ask, do you have savings for a rainy day or for emergencies? So please vote. Do you have funds for a rainy day or for emergencies? Yes or no? Don't worry, nobody's going to judge you. It's here so that Anna and I can help you or encourage you or get you to start thinking in the right direction if you do or don't have. All right, so 73% of people here currently have savings for a rainy day or emergency, which is great. And 27% of us do not have. So Anne, before you answer the next question, do you want to do you want to tell us what this is saying, what this looks like, what people should be thinking about?
I'm very impressed, and I'm happy that we're in good company, in company of people who understand. In fact, I saw something in the chat saying every day is a rainy day in Nigeria. I don't quite agree, but if that is going to make you put monies aside, then you're doing a good job. I'll just commend everyone. Thank you.
All right, thank you. So going straight into the next question. So there's a campaign that's currently running by FBN Quest. It's called Beyond Today. And I'd like you, I know like Ayo didn't really mention it or talk about it, but I'd really like you to let people know what that's about. And yeah, why they should get involved or not. You never know. Why should they get involved with the Beyond Today campaign?
Aha, that's a very valid one. So I'd use very basic concepts to explain our Beyond Today campaign. We all grew up, at least quite a few of us, being taught about instant and delayed gratification. Like, you can't get everything you want now. And so as we're now in the driver's seats, taking charge of our careers, taking charge of our monies, it's important for us to apply that very same concept. And so let's work on having buckets where we put our monies in, the bucket for the now, the short-term goals, and the bucket for the future, so that you can continue to maintain your standard of living. You don't want to just, have a great time, for a short period and then drop flat, because you haven't really provided for the future. And so that is the whole concept of Beyond Today. Whenever you receive your salary, whenever you make profit from your business, whenever you have cash in bank or hand, do you think of just now, or do you think beyond today? When we answer that question, we'll be in a very good position to make money moves. Thank you.
All right. Thank you so much, Anne. I really appreciate that explanation. Like she said, it's just about trying to think. It's kind of putting YOLO on the back burner. You only live once, yes, but you could be living for a very long time. So you need to make sure that it's an enjoyable stay on this planet throughout, not just now, that you're enjoying as much as possible. So you're not thinking of blowing money when you make it. You want to make sure that it's an extended period of time. All right, great. So Ayo, we've spoken about delayed gratification and thinking beyond today. Why would you say young people should be thinking more about investing at a young age? Because a lot of young people are there's a lot of savings talk, which is also important. But I want you to kind of give us some encouragement for young people who may not necessarily think that investing is something that they need to think of now. They might say, well, when I hit my 30s or my mid-30s or I'm closer to 40, I'll start thinking of investing.
Well, thank you, Jola. Earlier we talked about as a young adult, we're trying to build wealth and, emphasis on building. So that's the reason why we should start early. I'll just give a saying by Albert Einstein, and he said, the principle of, compounding interest is the greatest power in the universe. So if you know it, you're very powerful. And simple, the answer to this question is, the knowledge of compounding interest. What does compounding interest mean? It means earning interest on interest. So if you can understand, the power of compounding interest, then you will start investing early. And, once an investor starts investing early, the terminal value of your investment is higher. Just like if you start at the age of 20, at the age of 25, you get more power. I'll just give, a simple example. There are two investors right here in this room. There's Shade, who is 25, and she invests 1 million yearly. for 10 years. So that's a total of, let's say 10 million, right? The principal sum. At the end of 10 years, do you know the total sum is 120 million naira? That's the compounding interest effects. And then there's another investor, let's say Chinedu, just for example. Chinedu is 35 years old, and Chinedu also invests 1 million naira, yearly for 30 years. But guess what? At the end of the 30 years, the total is about 108 million naira. So that's the power of compounding interest and the power of starting early, because you build your wealth early.
Thank you so much. So the only way I can think of that is by comparing it to enjoyment. It's like enjoyment on enjoyment. Just
Exactly.
You stack it up.
Exactly. Yes, you're stacking it
All
up.
right.
You're building the interest on the interest.
All right, thank you. So let's say a bunch of people here have decided that, oh yeah, what Anne and Ayo have spoken about has really like gotten me interested and involved, and now I want to get really, really into investing. I want to start my hand at it. There's been talk of whenever people talk about investments, just in general, they always say no, diversify, don't put everything in one place, try your hand at many things, and that can be a bit confusing. Why should young people be thinking of diversification? Surely that's something you think about when you have like a substantial amount, or do you have to start from now? And
Okay, thanks, Jola. And I'm happy that you have heard about diversification because it is critical. And I'll tell you why diversification is so important. You've spoken about the basic, very cliche saying about you don't put all your eggs in one basket. It's cliche, but it's very important because the way financial instruments work is they all have their cycles. So everything rises and falls at different times. The equity market would rise and fall. The money market instruments would rise and fall. I'd give you an example. A lot of people like to invest in things like treasury bills. Just a few years ago, we were earning as high as 18% in treasury bills, and then it dropped to like 1-2% levels. And so everything goes in a cycle. So if you put all of your monies in just one type of investment, and then it drops from 18 to 1, the interest from that is working towards your goal. And so suddenly, the prospects of achieving your goal become bleak to you. I wish it were possible to just inform people, ahead of time when the market is going to go up and down. But all people can do is calculated guesses, so to speak. And so the safest way to avoid, just going from hero to zero is to put your investments in different types of instruments. So do a little equity, do a little money market, and they would even suit your various short and long-term goals anyway when you do those sorts of things, such that you don't just get to a stage where a certain market goes down and all your goals and plans go down with it. So that's the essence of diversification. Thanks.
all right. Thank you so much. And so it's not about the amount of money you have, it's making sure that the amount you have is a method of insurance almost, just making sure that based on the cycle of the market, you're not at the mercy of a downturn. So everything goes with that downturn. Okay, great. Thank you so much. So Ayo, do we have to have a certain amount? Because like I just mentioned to Anne, a lot of young people are anxious about investing because they quite frankly just feel like they don't have enough, and nobody wants to kind of waste because all these big names you guys call yourself wealth fund manager. My 10K is not wealth to is it's something I'm managing. So do you need to have a certain amount of money to be able to invest, or even your assets? If you think like, I don't have a lot going for me right now, maybe I should wait until I have something substantial so it doesn't feel like I'm wasting people's time.
Well, Jola, people always have this misconception of I need to have a lot of money saved down before I can start investing. And earlier I mentioned the different types of mutual funds we have in FBN Quest. With as little as 5,000 naira, you can actually start your investment journey with FBN Quest. 5,000 naira is an amount. Earlier we talked about making the decision, which is very important, setting your budget aside. So with as little as 5,000 naira, you can actually start your investment or your financial journey at FBN Quest. So you necessarily don't have to have a lot of money, or a lot of assets. You can actually start with as little as 5,000 naira. Once you've made that decision, I think that's the most important thing.
All right, thank you so much, Ayo. But there's saying that, and then there's the practicality of it as well. So I'm going to ask Anne, people that are newcomers that are just starting, and once again, like I said, I love the terms asset managers and wealth managers used to talk about money. So your portfolio, and it's just like, this is 100K. Okay, this is 50K. What portfolio? But for some people that are getting started, they are just honestly getting started. What are the options, investment options available to them to start building this portfolio?
Okay. So there are quite a few options in the market. But since you're talking about people who are just beginning, and so they may not have, a large chunk to start with. And like I said, wherever you can start is a perfect amount to start with. I think the mutual fund is a perfect solution for you. And I'll tell you why. When you're just starting, you're not likely to have enough skill to invest and really achieve your goals. That is sorted because you have tested and trusted financial portfolio managers managing your funds for you. The second is you might not have as much money to invest in what would give you the returns you want. So for instance, I'll just give an example of treasury bills, just something that hopefully everybody has heard of. To buy your own treasury bills, you would need an excess of 50 million naira. And I know not everyone, in fact, how many people who have just started investing would have that amount of money to put their funds in, to put in this sort of investments. But if you go to a mutual fund, funds are pulled from several customers, millions. And so the asset manager has enough money to buy all these investments that you can't afford yourself. And guess what? You get exactly the same percentage return as people who have millions and billions of naira in the same fund. So, it's such an amazing opportunity for you. And so I'd say the best way to start, depending on how much, irrespective of your skill sets, the amount of money, your goal, because I spoke about the fact that mutual funds address all your goals, whether it's naira or another currency, whether it's short term, whether it's long term, whether it's high risk, whether it's low risk. I think that's a very good place to start. Thank you.
Thank you so much, Anne. That's pretty useful, and it's very, very heartwarming. So you just don't feel like you're wasting people's time or your own time. It's nice to know that with the little you have or the much you have, you're able to kind of pour resources with other people like you and have someone that just manages that easily and makes solid investments on your behalf, and you're getting really good, well, hopefully excellent returns, or at the very least, like your money is just working for you and it's working in the hands of people who know exactly what they are doing. It's not guesswork. It's people who are working, they understand the markets and they know exactly what they are doing. So Ayo, I'm going to ask you what exactly, I know we've kind of had a conversation about, factors, but is there any criteria that helps the investment option that works best for you? Or is that sort of around the same thing as the factors you should consider?
Well, it's the same thing as the factors you should consider, and
Okay.
it's just it's the same thing. You look at your risk tolerance, you look at your situation, you think about your returns, the people where you're putting your money, the expertise, your portfolio diversification, your investment goals. So it's the same thing as the factors you should consider.
Okay. Because Anne had already kind of spoken to us about what are some of the long-term investment options, and you also mentioned the different funds that FBN Quest has available. Some are short, some are medium, some are long-term. I really want us to be able to go in to answer some of the questions people have sent in. But Anne, do you want to specify like investment options that are more long-term goals, or there's nothing to add to what you said earlier?
Well, just to give examples, things like equity. Because in the short term, equity, you can lose a lot of money. I think some of us who have been investing for a while have known that, you can lose a lot of money in the short term. But in the long term, the cycle goes up and down. You continue to earn dividends. It can be very, very lucrative. And so equity is one of the high risk examples. You also have some bonds that are long dated as well. And and bonds are debt instruments like Ayo had explained, whether government or corporate bonds. Those are also long-term options. Thank you.
Thank you so much, Anne and Ayo. I hope everyone has learned a lot. I know I have. I have pages and pages of notes. So, like they both said, think about what your goals are. Some are short and some are long. Figure out what your budgets are. Figure out how to build an emergency fund. Think about how to pay off your debt so you're not paying more than you need to. Your bills, and think of your retirement early. Make sure that you are protecting yourself with insurance. Short and long-term goals are different, and you have options available. You can check FBN Quest mutual funds. If you are looking at some of your short or long-term goals, they have a number of funds available for you that work regardless of the amount of money you have. What else? Start investing young. Start investing today, guys. Don't wait till you say, oh, I have a big birthday coming up in 4 years, I'll start then. No. Start today. Because like I said, law of compounding interest. The earlier you start, the better it is for you at the finish line. Diversify. Don't say, Ayo and they say I should invest, so I'm putting all my life's money in this one thing. And if anything happens, you're in front of the FBN Quest office shouting for Ayo and Anne to come out. So yeah, thank you guys so much. I know that there are lots of questions people have, so we're going to go into some of those questions so we can answer very specific questions. All right. Let me start with, sorry, just give me a moment, please. So the first question is, someone said, is it possible to set short-term goals and have them spread long-term? Ayo, Anne, is it possible to have, or let Anne answer that question. Is it possible to set short-term goals and then they now end up spreading into the long-term?
Well, yeah, it depends on what the goal is. So for instance, you can start with saying, I've been saving, I want to buy a house, or I want to lease a house, or take a mortgage for a house. And over time, you can find, bigger and better real estate opportunities. So yes, you can. And the important thing is to be working towards your goals. And so even if it starts off short term and it grows to be a long-term goal, because your aspirations are getting bigger, as long as you're in control of your money, you'd be able to achieve those. Because like we said, you're going to work with short and long-term investing. And so you'd be able to meet the long-term goals as they emerge. Thank you.
All right, thank you so much. And so someone asked, when Oluwadanola asked, when you receive your salary, how do you then divide it into the different buckets for now and beyond today?
Hi, Jola, is that for me?
Yes, please.
Okay, please, can you repeat the question?
Okay, so Oluwadanola asked, when you receive your salary, how do you then divide it into the different buckets you spoke of for now and then thinking of the future, thinking more long term?
Okay, so earlier we had mentioned, how to, make your money work for you, or how to make money move by setting your budgets. Like Anne said, you need to stick to your budget, but sometimes you can sleep. So once you have your salary, set aside your funds that you want to, you need for your day-to-day activities. You need to fuel your car, you need to buy groceries in the house. And then also set aside the funds from, that same salary that you want to invest. It could be in percentage or it could be in an amount. And then once you have the amount, you can look at the mutual funds. We have, the mutual fund that is as low as 5,000. We have the one that 50,000 entry level. And then you choose depending on your investment goal and your risk, tolerance as well before you start your investment. So you can, divide, you can have one or more mutual fund depending on your objective or your investment goal.
Okay, thank you. Someone asked if this money can go to an asset manager, and I think the answer to that is yes. Adele and Anne have showed us that clearly it doesn't matter if you think you don't have a huge amount of money. Wealth is not automatic like people think. It's actually something that is grown. So it's from the small money that you eventually grow your wealth. So yes, please, you can carry your small money to an asset manager. All right, so someone here is saying they're enjoying the talk, but they're Ghanaian and are interested in mutual funds at FBN. And does it also work for someone living in Ghana?
Yes.
Okay.
You can actually invest in any of the mutual funds if you live in Ghana. Yes, you can.
Oh, excellent. All right. So Anne, could you answer this question and talk about the FBN fixed income fund? And can you lose money if you invest on this platform? How does it compare to the money markets? That question is from Adigbenga.
Okay, thanks for the question, Adigbenga. I can see that you're looking into the details of this webinar. I appreciate that. So the fixed income fund is a more medium-term investment because it invests in bonds. And bonds, when they're in a portfolio, can go up and down. And so there ideally is a type of volatility in it. However, in FBN Quest, we structured it in a manner that you would not lose funds if you invest in the fixed income fund. You, however, are advised to stay for the medium term to be able to earn the sort of decent returns that are expected from the fixed income fund. So that's the major difference between it and the money market fund. While you don't lose funds on either of them, if you want to earn a lot more on the fixed income fund, you need to stay for longer. So we enjoy all the coupons from the bonds we've invested in, and then we also enjoy the rises in the cycle of the markets. And so you can earn much more than you ideally would if you're just doing a plain old like money market investment, which is also decent anyway. Thank you.
All right, thank you so much. Let me see if there's quite a number of. Someone asked if they live in South Korea, can they also invest?
Yes, as long as you're in Nigeria and living in South Korea, yes, you can.
All right, great. Thank you so much. I really want to appreciate once again everyone for listening and sending in questions and being quite engaged. Anne and I are smiling. They are very happy when people are, when people are talking to money managers and you seem engaged, they really are hopeful. So thank you guys once again. Yeah, and what I would like to do is encourage everyone who has even more questions to look out for information on their next webinar, the next leading conversations with FBN Quest, using social media channels at FBN Quest. So if you're Twitter, Facebook, Instagram, everywhere you go, at FBN Quest is what you're looking for. You can find more information. Hopefully this was informative. I know it helped me a lot. I have lots of notes. And if you have more questions or you need support, please send an email to webinars@fbnquest.com. I'll read that again. It's webinars@fbnquest.com. So if you have questions, need more support, need more explanation on some of the things that they've mentioned here, maybe you want to get more information, maybe you want to finally bring what you think is your small money to give to them, your big money, please, FBN Quest is really in the business of growing wealth. That's their job. That's what they do. That's what makes them happy. Not very many people smile when they're talking about other people's money, but wealth managers enjoy working with other people's money to make them even more So please, if you have any questions or need more support, check out webinars@fbnquest.com. Please send them an email. Follow FBN Quest on Facebook, Instagram, LinkedIn. You'll find out lots of information. And we're going to take one more poll. Our last and our final poll of today is, sorry, just a moment. It's going to come up on the screen now. And it's going to ask you if you're more open to investing. After what Ayo and Anne and I have said today, are you now more open to investing? We just want to know, before you log off, before you go, are you now more or less open to investing? I definitely am. Especially now I know that I don't have to. I always felt like I had to walk in with very intimidating money, like come in and say, I have 100 million. This is for you guys to do as you will. Yeah. So yeah, 93% of the audience is more open to investing. So Ayo and Anne, you've done a fantastic job. You've done an amazing job. Very well done. 7% is undecided, but we'll work on them. We'll work on them. But thank you so much for listening and taking the time out on a Thursday afternoon. An hour flew by, but we know that an hour is precious time. So yes, we wish you guys a really safe and productive rest of the week. Again, please, I'm really hoping a few of you take the plunge and send an email, start investing, start getting your money to work for you. Let's remove anxiety when it comes to financial decisions and financial planning. Thank you once again on behalf of FBN Quest. I personally want to thank Ayo and Anne. They've been amazing and very patient and very informative. And thanks to everyone at FBN Quest that made this possible. It was fantastic. I had a very good time. Guys,
Thank you,
enjoy the rest of your day.
Thank you. Thank you, Jola.
Thank you, everyone.